The end of 2023 saw a slew of companies going public, and it is only natural that there will come a time when their lock-in periods end. Now, according to this latest note from Nuvama Alternative and Quantitative Research, over 563 crore shares of 54 Indian companies will have their lock-in periods of various time frames ending between January and April. But before we go any further, let us tell you again that the lock-in periods ending does not necessarily mean that the shares will be sold in the open market, but will only become eligible to be traded. Now, out of these 563 crore shares, nearly half or 46% of those belong to just one company, and that is IRFC. The Indian Railways arm will see its 1.5 year and beyond lock-in period end on the 29th of January, which will make over 261 crore shares of the company, or 20% of its outstanding equity, eligible for trade. After a lull for most of its listing journey starting 2021, the shares of IRFC had a stellar 2023 and are now up 4x from its IPO price of 26 rupees. Now, besides IRFC, there are companies like Dreamfolk Services, Harsha Engineers and Electronics Mart will also see their 1.5 year and beyond lock-in period end between March and April of this year. In fact, Dreamfolks will see nearly 70% of its outstanding equity become eligible for trade once its lock-in period ends on the 4th of March. Now, let's come to the recent listings, which will have their 1-month lock-in period end, and stocks like India Shelter Finance, DOMS Industries, Inox India will see 3 to 6% of their outstanding equity become eligible for trade throughout this month. Now, the 3-month lock-in period list throws up some interesting names. Ireda, whose shares tripled within a fortnight of listing. Honasa Consumer, which started off with a lull but recovered after a brokerage bet big on it, and Tata Technologies, one of the most awaited IPOs of 2023, and these companies will see anywhere between 10 million to as high as 100 million shares become eligible for trade across the month of February. Now, interestingly, shares of most of these companies are trading either below their listing day high or their recent peaks. Now, over to the 5 to 6 month lock-in list. Now, that will see the maximum number as well as the maximum percentage of outstanding shares free up for trade. Now, for stocks like Utkarsh Small Finance Bank, SBFC Finance, they will see as many as 660 million shares become eligible to trade on the 19th of January, and SBFC Finance will also see over 600 million shares freed up. Now, other names include an underperformer like TVS Supply Chain and an outperformer like JSW Infra. And lastly, Divgi Talk Transfer, which was the first IPO of last year, will see 36% of its outstanding equity become eligible for trade once its lock-in period ends on the 11th of March. Now, a lot of these shares have also run up significantly due to lower float in the market. Now, it remains to be seen whether the freeing up of these shares will result in any increase in supply for some of these names. We'll keep an eye out on all of these names.